is March 26th, and we are reaching the end of the first quarter, and we have oil prices, at least on Brent, bouncing off $87 a barrel. Let's kick off this morning with Dr. Raad El-Kadiri, non-resident fellow at the Center for Strategic and International Studies, because I think we have a very strong geopolitical narrative this morning. I'm not sure what its impacts for the oil markets it is, and that's why Dr. Raad gets paid the big bucks, and he will tell us. Raad, obviously, it seems to be the big geopolitical story of the morning, and correct me if I'm wrong, that US and Israel, the tightest of allies historically, seem to have parted ways on the Security Council. Your reading of that and its ramifications, wider geopolitical and for perhaps the energy markets. Your thoughts?
Good morning. Yeah, I mean, look, I think it is a big deal. It's when the US doesn't stand up for Israel at the Security Council, something's wrong between the two. But I think it's sort of indicative of US frustration with the Netanyahu government, with its policies in Gaza. It's an effort in particular to steer that government away from an attack on Rafah, and to try and sort of work it towards a lasting ceasefire. There are political ramifications domestically for the Biden administration, particularly in some core swing states. But I think sort of overall, there's a sense that the, hug Israel tight and guide it is no longer working. And this is a sense of letting Israel go and show the Netanyahu government that there are consequences. The US has tried to downplay it a little bit, saying it's a non-binding resolution, and obviously it only abstained, it didn't vote in favor. But it's a significant message, and probably the biggest sort of schism between the US and Israel in a number of years, indicating that Washington wants to see this war brought to a conclusion.
I think even Donald Trump said as much in whatever reported comments he has been saying on Israeli media. Jorge Monteagudo, Managing Director, Benchmarks Oryx Capital Group. Jorge, how much of this rise out of that tight band that we've seen over the recent months of the first quarter, breakout above 85, is due to geopolitics and an elevated premium, or is there more fundamentals in this marketplace from your perspective?
It is a combination. There is the greater Brent market, the greater production overall. Whatever OPEC agrees and Russia agree, which, as we know, in the most recent event, Russia is calling for a further reduction or enforcement of the agreements they have with OPEC. Those things affect the market, and they're outside of whatever is going on politically in the Middle East. But due to the confrontation, of course, there is a sense that something bad that affects supply could happen in the greater terms. So that's where the combination comes in. And on a realistic basis, the Houthis have affected transit in the Red Sea. And by affecting that transit, they have added weeks of sailing time to the ships avoiding that area, and has added significant consumption of fuel oil as the ships have to travel further. The consumption of fuel oil on a bigger crude oil basis are not significant, because they may be between around 100 barrels a day. But they add to the overall consumption of hydrocarbons and definitely affect the efficient operating of the oil markets. So I would say that if we would see Israel agreeing to not intervene further in Israel and exploring a ceasefire, and the Houthis agreeing to the ceasefire and the free transit of ships, we could see an easy $5 off the market, like immediately, with a 5 to 10 correction. But not anything over that, because the market is still constraining its supply.
Let's go to Serena Wang, head of APAC analysis at Vortex. Of course, Serena, one of the pillars always and every day of the week to the oil markets is China, China demand, China outlook. First quarter now done with obviously the new year, the Chinese New Year early in the quarter. What does the overarching picture look like in China? They've identified 5% as their growth target this year. Is it a more bullish story than the markets were reporting early in the quarter?
Yeah, good morning, Sean. Well, indeed, the market has seen pretty optimistic results, and it actually surprised the market to see that in the first 2 months of this year, China's industrial activities and the consumer sentiments actually beat market sentiments. But we all know that a lot of it is very much fueled by the seasonal demand from the Spring Festival, the kind of hurrah troubles around Chinese New Year. And now that we're entering into the second quarter of this year, this kind of seasonal demand factor from a consumer perspective has kind of evaporated. And let's not forget that a lot of the debt, the housing crisis, the pessimism around the real estate is still going to be there. And the government, right, while has put in place a 5% growth target for this year, has also seemed to be holding back a little bit in going all out to boost and add stimulus into the economy by adding more debt. So there exists some sort of kind of cautious optimism that China could potentially meet its 5% GDP target growth this year, but in the absence of a very strong stimulus, there still remains a lot of question mark around market participants as to whether they can confidently meet these targets.
Rad, I wanted to get your thoughts. Just if we've existed for quite some time now, 6 months perhaps, since the start of Israel's invasion of Gaza, that the Ukraine-Russia war and Israel's war in Gaza are being sort of two separate events. And I'm wondering, did we witness in Moscow over the weekend the tragic act that saw so many people killed in the theater there on the weekend? Are there dots connecting here? How do you see these wider elements playing out? Obviously, in the Congress, they're connected because the U.S. government is trying to fund both armies from the same budget and the same bill, obviously funding Ukraine, funding Israel. But is there a connection of dots here with the events in Russia last weekend? Your thoughts?
No, I'm not sure there's a connection of dots. It's a reminder that sort of when it comes to geopolitical events and instability in the wider world, that there are some lasting currents. ISIS-K, which is thought to be responsible or took responsibility for the attack in Moscow, is also the same group that launched the attack in Iran late last year. And it's a reminder that those security challenges still exist. And,
but that's the question, isn't it? That's my question. That's my question. Who's behind ISIS-K to make those two events the same?
Look, I think ISIS is still sort of active. ISIS still has never gone away. I think ISIS has tended to be associated with Iraq or with Syria. But the reality is that it's a sort of multi-headed hydra. And it's been operational in Afghanistan. And I think, there's been a sense that sort of out of Afghanistan, it's extended its tentacles. And that's what we're seeing. I mean, the ISIS issue is a political issue, is an issue of instability that has been sort of present for 20 years, if not more, in various manifestations. But what it does remind you is that, there are surprises that still come out of the woodwork that I think we've turned the focus away from. As you have this focus on Gaza, as you have this focus on Ukraine, the security political focus is in that direction, that, it possibly sort of takes your eye off the ball. And for the Russians, that has been extremely costly.
I'm wondering, though, ultimately, who are the puppet masters behind ISIS-K? I think there has to be some real thinking behind that, because inevitably that's what Putin's doing right now. He doesn't buy the ISIS-K narrative, I suspect. But it's complicated. We'll have to move on from that. Jorge, there's been a lot of talk again. I mean, it seems to be forever present. I'm wondering, do we care anymore? Is Jay Powell going to cut rates this year? Is he not? When is he going to do it? Is it relevant for the oil markets anymore, Jorge, the direction of travel, what and how fast the central bankers reduce the price of money?
Yes, it is. The creation of debt by the US government and any other country in the Northern Hemisphere remains at a very critical pace. At the same time, it is clear that despite the creation of money, which has been by mountains, the economies in the Northern Hemisphere, perhaps with the exception of the US, are doing very badly, from Japan to Korea to China in particular, and then in Western Europe. So inflation nominally has come down, and that gives the various governments the implicit right to lower headline interest rates. At the same time, they have so much debt that they need to buy money from the market by issuing debt and getting the money. And that is costly, and that acts the opposite in the cost of money. So Powell will try to reduce interest rates. But
not because of inflation, but because of the price of money, because of the debt. The lead story of the Financial Times this morning is the warning from the budget office in the Congress that things are getting close to the edge of the cliff.
Yes, they are. Yes, they are. So they will try to maintain and reduce interest rates, while at the same time borrowing ever-increasing amounts. Because as we discussed the last time, we're borrowing close to $1 trillion of US dollars every 100 days. And even the Citadel CEO came in to warn the market that this is unsustainable. It is unsustainable. So we are now here playing out into the beginning of the reset. And that beginning of the reset is when people are only attracted to invest in US instruments at higher interest rates, and then that takes away the power from power. When that happens, inflation will kick in with a vengeance. This is the reason why I have been very consistent since last year that we're on an upward trend in the price of oil. Oil is very moderate because it has to do with the overall economic performance. But if you contrast the performance of oil with gold, gold has started to trend up. It's the beginning of that reset and that realignment of funds which people do away from treasuries and treasury instruments into alternative equities. They haven't yet done that fully in oil.
Or Bitcoin. Or Bitcoin, I say.
Yes, it's another indication that people are reallocating. As they reallocate, at some point, oil will pick up that steam. And I have been pretty clear that that steam will start in earnest by June, about the rise in energy and the rise in inflation. So it is a very critical time in the functioning of global markets and the performance of central banks. I want to add something before you move on.
Please.
You focus as well on the losses that the central banks are making. They're enormous. The Bundesbank lost money, the EU lost money, the Swiss bank lost money, the Feds lost money. I forget the precise amount, but the Feds in the last 12 months have lost about $156 billion. And that line will continue to generate losses, and hence it gets transferred into monetary creation, which then creates inflation.
Serena, I wanted to get your insights from Vortex. What impact the situation of the Red Sea is now having? Obviously, Jorge mentioned it earlier in his comments. It's still obviously a zone of conflict between the Houthis and the international navies there, sending ships wider around the Horn of Africa What impact is that having on shipping, these longer journeys? Obviously, we know it's consuming more fuel oil, but what about shipping rates, the availability of tankers? Any legacy impact there yet?
Yes, definitely, Sean. I mean, like what Jorge has mentioned, the additional 2 weeks of moving the vessel around the Cape of Good Hope is definitely tightening the tonnage supply. Now, let's also bear in mind that it's not only the laden leg that is taking up the additional tonnage supply, but when the vessel ballasts back after delivering and unloading back to the port of loading, it has to take an additional 2 weeks. So that could additionally add up to a month if a vessel were to transit from the Middle East all the way to Northwest Europe and ballast back to the Middle East again. So that has already had the effect of tightening the tonnage supply at a time when we've already seen freight rates rising. But this development has really happened over the last couple of months, and we already started to see rates stabilizing. But what's really interesting is actually we're starting to see from those vessels that used to carry Russian euros, because of the step up in the US sanctions, because of the scrutiny, more of the Greek-owned, EU-owned operators are now moving away from the Russian sanctions back into the mainstream fleet. And that's added additional tonnage supply to alleviate part of the supply tonnage. But what it is doing right now is, from a Russian euros transportation perspective, the tonnage supply is now tightening, putting a strain. We have not yet seen that logistical constraint coming in to really choke off or reduce the exports of Russian crude towards Asia. But it remains to be seen how Russia will be dealing with the tightening tonnage supply.
Rad, we've seen in recent weeks the ramp up the Ukrainian targeting of Russian oil infrastructure, notably the refineries, but also the port facilities in the Crimea. How significant, I mean, using fairly low level, cheaper technologies like drones, how much is the lack of money forcing them to rethink what they can do, how they can do things? How much more of this should we expect? It seems to be starting to have some impact on supply.
Yeah, it's had a significant impact on supply. When you take out 600,000 barrels a day of refining capacity, that's not an insignificant number, particularly in markets that are relatively tight. No, it has been the sort of step that the Ukrainians haven't taken over since the invasion in 2022. They've, with the odd exception, fairly assiduously avoided energy infrastructure, and that's really been at the behest of Western allies and Western backers as much as anything else. You saw one or two attacks, but nothing major. I think that this is more systematic, and it may well be a sort of sign of the Ukrainians sort of feeling a sense of desperation, wanting to sort of regain the initiative. Certainly, if the much promised offensive last year didn't really sort of materialize or materialize into much, and a sense of trying to hit Russia at its crucial sort of economic arteries and put pressure that way. Now, there's pressure, I think, from the West on Ukraine to stop that. Particularly as you go into an election period in the United States, the last thing that the US wants to see is a sort of major spike in oil prices brought on by the Ukraine crisis or any other crisis for that matter. So I think that pressure will persist, but I think the Ukrainians will feel that this is a fairly cheap way of inflicting sort of more damage and more economic pain on the Russians than perhaps sort of straight battlefield operations.
And just on the outlook of that, Rad, I mean, this might be another way of the Ukrainians prodding their supporters to say, well, if you don't want me using these cheap drones, send me some money. Is there money coming from Washington? What's the outlook there for the next round of funding that the Republicans are blocking?
It is being blocked. The elections are getting in the way of a great deal of stuff. So you had sort of efforts again to try and sort of pass that through the House, which failed just last week, as some of the issues in terms of keeping the government open sort of were at least sort of addressed in the short term. The reality is that it's become a political issue domestically, certainly sort of Republican support and Trump support for Ukraine and aid to Ukraine is diminished. And it doesn't look like that this House is going to sort of do anything. This House of Representatives, controlled by the Republicans, is going to do anything to deliver aid in the short term. So a lot of the pressure is going to fall on Europe, and the questions there again about sort of the amount of money available and the amount of weapons that the Europeans are willing to share. So I think there's going to be a tough set of negotiations as we go into spring and into summer, with Ukraine increasingly, as you say, sort of seeking to lash out and seeking to sort of put pressure as much on its allies as it does on Russia to get sort of more support, and certainly to sort of allow those supply chains of weapons and money to pick up again.
Jorge, just picking up on that, the sort of market implication. I mean, with that, we see the tightness already, never mind tightness in crude, but tightness in middle distillates, gasoline, going into the sort of peak summer driving season, Jorge. And now we're also seeing inventories in the US consistently drop each week when it's reported by the EIA there. There's some real tightness coming into the middle distillates, the gasoline, aviation fuel, going into the peak demand period. Your thoughts, Jorge, on the outlook for that and the price at the pump going into the election cycle, as Rad mentioned?
I am so glad you asked me this question, because as you were just in the previous segment talking, it comes to my head that there is a serious, strange, and ironic alignment between Russia and the US. Both countries have been subject to terrorist attacks. Both countries see ISIS as the enemy, or have seen it as the enemy. And both countries have suffered from those actions and have engaged in military action. So the US and Russia are aligned in that fight. In addition, both countries are also aligned in the fight against terrorists or military men that attack facilities and create inefficiency in markets. So the Houthis are disrupting trade supply. The Ukrainians are disrupting gasoline supplies. Both of those actions lead to a higher flat price, as we were discussing, whether it's 10 or 5 or something, it adds to the overall pressure of the markets. And in the US directly, gasoline prices are now on the cusp of around $4 a barrel. The American consumer is definitely not happy when it crosses that line. And this is very damaging to the US. So the whole system right now is poised for gasoline to cross $4. And we can feel the bullishness in the crude market as we head above 85. It tested, come down, and then it pushes ahead again. So as we head into the summer, with the prevailing conditions, I am very friendly towards 85, 90. As we go beyond June and we print more money, and that depends how much more money we will print, but it is likely that we are in the 90, 100 level. So it is coming. It's just, we need to get out of the way.
Everything is kind of feeling inflationary given all of the various aspects here. Let's go to the survey question, and one very, we started our conversation think was a big deal, part of the whole equation, but maybe is not. How will U.S. decision not to veto a UN Security Council resolution demanding an immediate ceasefire in Gaza impact oil prices? Bullish, bearish, or no impact? You would think that if the U.S. is telling Israel you have to stop in a fairly increasingly stronger language, at some point Israel will probably have to listen to their biggest backer, but they look pretty defiant. So is it bullish or will it move to bearish, as Jorge said, that if these events were to stop or to, could see $5 drop out of the market, or no impact? Your thoughts on this question? Serena, I wanted to get your thoughts on the wider outlook in Asia. China, obviously, we talked a bit about, but we've had some very, big. India is is continuing to perform very well. Its economic growth going into its own election, 6-7%. Indonesia just had its election, seemed to go quite smoothly, etc. Where is the rest of Asia as we come out of winter, looking from a demand point of view and economic health?
Yeah, so I think from a economy point of view, the rest of Asia seems to continue to be relatively healthy. We talk about Thailand, even the Philippines, as well as Vietnam. Well, inflation continues to remain a primary concern for these countries, but let's always remember that for these countries, what's unique for them is the heavy government subsidies for the transportation fuels. So even as oil prices climb, we continue to expect that the government will subsidize the gasoline and the diesel to make the livelihood affordable to the majority, to the masses, especially in an election year. So from an imports perspective, we continue to see relatively healthy imports of transportation fuels, especially in Southeast Asia.
Rad, I wanted to get your thoughts also on this sort of the continuation of the theme as we go deeper into the election cycle. We saw on the last midterms the Biden administration taking some actions and releasing from SPR to ensure lots of supply. The re-engagement in Venezuela, which has opened up Venezuela's opportunities for exports, has come in this cycle, it would appear, but that's up for renewal. My question is, how does that look, the renewal or the extension of Venezuela's opportunity to export more oil, and other actions that the Biden administration could take in this election cycle?
I think in terms of the SPR, there isn't really enough crude to sort of do any major damage in terms of prices this time around. I mean, you're looking at an SPR that hasn't been filled up anywhere near to the same levels. It's possible it could be released, but I think, absent a major interruption in supply and a major emergency, I think just simply gasoline prices won't be enough. Venezuela is a more sort of difficult issue. I mean, on the face of it, the Maduro government has done nothing in terms of what it was expected of it when this temporary lifting of sanctions was put in place. But clearly, any moves to sort of go back on that, to restore those sanctions, is going to sort of kick up prices a little more, and it'll be felt very, very much in the US market, and sort of with Venezuelan supplies going to the Gulf Coast. So I think, the administration is going to think twice about it, given how brazen the Maduro government has been. Certainly in terms of the conditions, it's a difficult one for the Biden administration. I still think the odds are that it will take some measures to restore sanctions, maybe not all measures to restore sanctions. But if you'd asked me a month ago, I would have said that, without a doubt, those sanctions were going back into place. As you've mentioned, in terms of gasoline prices, that puts a different hue on things. But I think there will still be pressure and political pressure to try and take some measures that look to be punishing or repunishing the Venezuelan government, given the decisions that they've made vis-a-vis the opposition in the elections.
Jorge, last word with you. I wanted to get your thoughts on the sort of noise coming out of CERAWeek. Of course, one of the biggest energy, oil and gas events in the world, in the calendar, at least from a thought leadership point of view. My question, Jorge, is really the sort of mojo back in the oil and gas industry to be so dismissive of the energy transition in a very kind of overt way. Your thoughts on what you heard coming out of CERAWeek, Jorge, and particularly if you'd address that point, your thoughts on it.
Yeah, I think the industry, and I think you're referring, or I would refer in particular to the comments by Saudi Arabia and also by Exxon. They were kind of unusual, that they were on your face, essentially saying, forget about transition, oil it is. By the way, I'm here in Singapore, and my friend has a nice Tesla. It's a good car. But I have been trying to explain to him, unsuccessfully, that any energy transition is subsidized, and that therefore it doesn't work at face value. Because for something to be truly economic and to have a right to compete in the economic space, it should be without subsidies. And then we can see that it works. Take that to say that I am not against transition or in favor of transition. I am in favor of good decision-making, and good decision-making requires no subsidies. I have the feeling that oil companies are becoming aware that the power of governments to force transition to subsidies is ending. And we were having this discussion a couple of nights ago as well, that if a government is running out of money, and all governments are running out of money, and they have to make a decision between funding health or funding the acquisition, the purchasing of a Tesla car, which way are they going to go? They're going to forget about these efforts to transition and go into harsh economic decisions. And in a harsh economic decision environment, oil wins. And I think the executives are sensing that.
Jorge, just to pick up on a comment in the chat room saying that Jorge's not bearing in mind the fact that the cost of climate change on these governments is much greater than the cost of subsidizing the transition. Your thoughts on that from a policy point of view, choices?
Well, I'd like to study a little bit of geology and the geological ages. And really, my experience in this planet from a geological point of view is irrelevant. I was in a museum in Europe maybe 3 weeks ago, and they were noting that the Europeans of the time, about 6,000 years ago, made it onto the flatlands of Europe because the temperature had gone up a little bit. And that enabled them to hunt and to live and to develop housing. So whoever is thinking that climate should be the temperature you experience today needs to wake up and realize that climate changes, and it changes all the time. We may be the cause of it at the margin, or we may not. Who knows? We need to live today and nobody can forecast what the future will do in terms of climate. It's impossible.
We'll have to wrap it up there. What it does seem is that the oil markets is, here's our survey result, bearish would be the sentiment. It would appear this morning, at least in the open in Asia, they haven't cared less about the UN sanctions or the UN resolution because oil prices on Brent are essentially not changed, just on the doorstep of $87 a barrel. But sometimes these things do take a delayed reaction, and we'll have to see as the week progresses how all of this plays out. But until then, I just want to thank our team today for joining us. Obviously, Jorge in Singapore, as he says, which is a regular spot for him. Dr. Rad Al-Qadiri, both Rad and Jorge, of course, are in new positions, new jobs, and we congratulate you both and wish you great fortune on that. And Serena Wang with Vortexa in Singapore as well. Thank you so much for your contributions today. All the best, and we'll catch up with you all again soon. Thank you.
Thanks very much.